right, let's talk today about the cause of high mortgage interest rates, because you might be quick to point the finger at Jerome Powell and the Federal Reserve, and you'd be partially right. However, the full answer may surprise you. We're going to expose the truth about high mortgage interest rates in today's video, so make sure you stick around for this. Now, the Federal Reserve has commanded some, I would say, outsized attention this year with their systematic and significant increases in the federal funds rate. And those increases tie directly into many types of lending. For example, credit card interest rates are prime plus and generally have increased very quickly in lockstep with the Fed's rate increases. Mortgage interest rates have obviously risen as well, almost doubling since spring. However, mortgages are much more complex instruments, and the key driver is almost invisible to the average borrower shopping mortgages. When lenders extend mortgages, they generally will not hold onto the loans themselves. Rather, they'll frequently place them into bonds that are available to investors. During the pandemic, with bank deposits soaring and an abundance of investable cash on hand, banks snapped up these bonds at a brisk pace, which held mortgage rates at near record lows. The biggest buyer was the Federal Reserve itself, which purchased huge chunks of the bond markets to stimulate the economy during the pandemic. Its holding of mortgage-backed securities roughly doubled from before the pandemic to $2.7 trillion. The 10 banks that owned the most mortgage-backed securities increased their holdings by almost $219 billion last year. However, as the Fed funds rate has stepped up repeatedly this year, banks and other institutional investors, including the Federal Reserve itself, have moved away from those bond purchases. The 10 largest bank owners of mortgage bonds trimmed their holdings, their bond holdings, by $133 billion during the first 9 months of 2022. The Federal Reserve itself hasn't bought bonds at all in the past couple of months. The smaller pool of buyers who are still interested in investing in the bond market are demanding higher yields, which means in turn that mortgage lenders have to pass along higher rates to home buyers. Until the supply and demand in the mortgage bond market moderates, mortgage rates are unlikely to make any significant downward adjustments. So there you have it, the full picture of what causes higher mortgage rates. Were you surprised by the effect the bond market has on mortgage rates, or is this just old news to you? I'm curious, so make sure you let me know in the comments below. Also, be sure to drop any other questions that you'd like us to cover in future videos. That's how many of these conversation starter videos are coming up, is your questions. So interact, engage, respond, keep it civil, but let us know what's on your mind so that we can dive in and help you go further, faster financially. Until we see you on the next video, make it a great day and keep on cash flowing.